Hey everybody, Economic Ninja here. I hope you're doing great. We're looking at the silver price. The silver price seems to be taking off, but I'm going to bring on a special guest in a few minutes to talk about it because there is something big building. And do we know if it's going to go to the upside, to the downside? What is the probabilities of that? We're going to make some price predictions. We're going to get some technical analysis. It's what you really want and you need. But first, I want to share some stories of what is going on right now in the market. As of the recording of this video, silver has crested $25 an ounce. Gold is at $2,039. We're seeing so many incredible things happening, and it's because of stories like this. Out of the daily FX, silver price forecast on a knife edge as key confluence area reached. People want to know what is happening in the world, in the market, and I think it's very important, especially when it comes to silver prices and your investments, to know what's going on. So, Johnny, welcome. What's going on with you, man?
Hey, buddy, here I am. We've actually been, go ahead.
I just want to start with hair. Your hair looks great today, just everyone's gonna make a comment about yours compared to mine, even though you're using one of those reverse mirrors where objects seem higher or bigger than they really are. Okay, so what's
Well,
going on, man?
so the reason why my hair looks like this is purely because of a green screen. I'm actually bald in real life. So if you ever see me on the street,
It's true, guys. I hang out with him. He's completely bald. So, and he looks really close to Joe Borgen. So, hey, Johnny, there's some stuff you want to talk to me about the silver market. Let's talk about silver prices and where you think this is headed.
well, I have some great news and I have some horrific news. So because I am a trader, now, guys, don't kill the messenger. I look, see, silver. I own lots of silver. I own physical. I do understand the difference between paper and physical. And I do understand the difference when Chase and JP Morgan come out and they smash the price down. So they can do that in the paper market. They can't do that in the physical market. So I'm going to show you in the charts what is going to happen. Now, I say what is going to happen. Now, if I could share my screen.
You should be able to. And as you're sharing screen, Johnny, I want to explain people. I remember Johnny when he bought his last batch of physical, he was like, "Holy cow, is it really that expensive?" And I go, "Yeah, that's the problem when banks smash down the price or when people race into the physical market, that premium just explodes."
All right. So can you see my screen?
Yeah, I can.
All right. So all I see is me in Chase Bank with a green screen.
Oh,
Okay.
really?
All
All
right.
right. No, I got it.
That's what I did that's what I used to film today. Okay. So enough of the scroll. So this was about 3 weeks ago. I called you or I texted you. Did I call you or text you? I'm like, bro, I need to show you something in the charts. And I actually circled it. So
Yep.
that is that circle. And I'm like, it's going to go right into there. So it was quite a bit lower when I messaged you, and I was like, dude, your audience, because I know your audience is very gold and silver driven, and I'm like,
Yep.
they need to see this. So I drew it, and when I pulled it up, I'm like, oh my gosh, it hit my circle. So what I want to show you guys, just because a lot of you, I get it, you're not traders, you don't follow lines, and it can become very confusing. But I swear the charts predict the future. I'd probably say 85% of the time. And that's why I can draw this stupid little circle up here and go, it's going to go into that. So that's good news. Okay. The bad news. So what you guys are currently seeing is a broadening wedge. It's a ascending broadening wedge. And that is actually bearish. So your price target on this is back to resistance, which I'm using my fingers, but I probably should be right in the, I don't know if you could see, I'll draw a line.
I can see all the squiggly things you're doing with your mouse right now.
Okay. Cool.
Yeah.
So it's probably going to come back down here and retest $17 just to be like, let you guys know.
And you had a very similar call a little while ago, so you're still on track for that. You're talking
right. Yep. Bravo is 3 for 3. But first, because what things do is like they fall out of, like when something falls out of a tree, it's like hits branches on the way down. Your next level, and actually, maybe you want to share with your audience. The next level is right here. That's going to be the bottom of your ascending broadening wedge. Now, okay, so let's set that aside. And those are levels. So those are the levels that people say, I just need to get out. This is, I break even at 20, it dumped. Once it hits 20, I'm out. Or once it hits 30, I'm out. So they've been underwater for, say, a year or 2 years. And so that's how you get those levels. And you get so much volume coming in at that level so that people can finally break even. I don't do that. I take calculated risks. I get in and I get out. I get in and I get out. So let me show you some other things that are going to happen on this. If I were to turn on, let me zoom in a little bit on this. This is Lux Algo. It's a paid thing that I use. If you get in this area, that brown area, if you could see it, when you enter into that, that is your last warning until Chase or whoever dumps on you and just takes. See, right now everyone's excited. Everyone's like, oh my gosh, buy gold, buy silver, which I get it. You know, this is your FOMO area. This is where you don't want to be entering. You wanted to enter weeks ago, months ago, years ago, when, you know, when Ninja was telling you to, or when we were at the bottom of that wedge rising, like go there, sell there. So if you want to accumulate, this is not your accumulation zone, which usually doesn't work out too well for people.
Johnny, can you real quick, guys, if you want to learn what to do with this and learn technical analysis the way Johnny teaches it, I'll put a link below to that course so you can learn this. But really, I wanted you to also understand what Johnny does. He's very good at it. He is trading the paper price. And when the price drops significantly on the paper price, investors in physical tend to rush into physical and it runs the premium sky high. So there's a total difference what Johnny's saying, and I agree with him, and where the price is going and what is happening in the physical market. Because if you save a couple bucks or $3 in the physical, but it costs you another $3 or $4 in the price, or, you know, in the paper, you're saving $3 or $4, but in the physical, you're now having to pay another $3 or $4 in the actual price over spot to get it. What have you achieved? Johnny, real quick, as you're showing us these things, to me, the only way that we really see a dive bomb in the price of silver or the price of gold is a couple different things. Either the Fed drastically raises rates, or all of a sudden we see manufacturing fall off a cliff, and they use that whole theory, oh, well, because, you know, silver is so tied to manufacturing, it's gonna be needed less. So what do you think about that?
Well, be more specific in what you're asking. Ask me the one question, because I'm an idiot.
The only thing that you're showing these charts, and you're showing the charts show the future, right? But it also, the future is based off of events that happen. And the only events that I could see is manufacturing all of a sudden just completely collapses. And they say that physical silver is sort of tied to manufacturing, so that's why it drops. Or the Fed continues to raise rates, which would continually bring the value of the dollar or perceived value up, which would hurt gold and silver. What do you think about that?
Well, I'll show you in the charts exactly what's going to happen. We're going to go into a recession. We're manufacturing. The numbers just came out today. They fell off a cliff. Shocker. But I'm going to show you exactly where the Fed is going to pivot. And I can show it to you in the charts. Why? Perfect. Because I can go back 40 years and tell you exactly what they do. It's actually the entire bond market. That's what controls the entire world. It is a debt-based evil system. Because who in their right mind, like, you take the greatest biblical asset, gold, silver, God's money. Yep. What's the opposite of that? What would be the opposite of God? Well, that would
Satan's
be debt.
Fiat currency.
Right. So they take debt and they're like, let's create a monetary system that is only debt. Like, that is 98% of money is only debt. I walk into Chase Bank and I say I want a loan, or whatever bank. Let's say you create a box out on the street and you say, here, sure, even though you don't have it, which we're finding out the banks don't, but they write you a check for $1 billion. Poof, $1 billion just got created out of thin air. That is an asset on the bank's balance sheet. It is a liability to you. Money was just created even though it doesn't exist. So money does not exist, and it is debt, which is evil. But this will come to fruition. It will come to pass. And then the real money, well, that's what's going to happen. Now, am I on me or am I on my screen?
You're on the screen.
Oh, okay. And so you can see my screen and you can see me?
Yeah, you're touching the debt clock.
Okay. Let me give you here. Paper to silver ratio. 345 to 1. Paper to gold, 122. So if anyone ever, I mean, and you know this, it's same thing with crypto, 9,000 to or 17 to 1. Like silver is, when this thing goes, when it breaks, which it will, but we just don't know when. Is it now or is it in 100 years? But at some point, it just ends. A debt-based system ends and real money takes over. So, okay, so now I'm going to go back to the charts. Plus, I'm going to show you when pivot, because you have to look at, and then you know what happens in a recession. Gold sells off, silver sells off, Bitcoin sells off, bonds go up. It's and if you want to play what side, TLT is your inflation deflation side. So inflation, run to stocks, deflation, run to TLT. So it's like an inverse correlation between the two. Anyhow, so moving over onto what we are seeing on the charts for silver, let me turn on let me change my bars so you can see candles. Every single one of those candles is a day. I'm currently on the daily. So the green little bars are every single day. This was yesterday. That's today. Now let me turn on one more indicator for you so you can see. This is called, I call it my 9 count. Yes, it's in every single one of the courses that I do. Once it hits 9, it's supposed to sell off. This has not sold off. It has continued to go. And every single time it does, it gets smashed down. So you should not, this is where you should be selling, if you're trading paper, into this area. Absolutely 100%, like no questions asked, double your money. Yep. So anything above 9, when this retreats, it's going to retreat very, 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 very hard. Now, coming back, the last time it even touched, now let me get rid of let me get rid of my 9 count, because that just gets kind of yucky. Coming back here, when it goes into this Lux Algo zone, which it did, was this in March, middle of March, end of March, it sold off. Silver sold off. I'm going from the top, from peak to trough, 35%. So
and we did a video with you calling that. And so that's why I'm telling people, if you want to learn how to do this, I'll put the link below, because this is very important. People get this.
And everyone said, you're wrong, Bravo. You don't know what the hell you're talking about. Go home, shave your head, go cry in a corner, because this is God's money. Like, I get it. I have no dog in this fight. Like, I have silver. I have a lot of it. Probably more than 99.999% of all humans on this planet physical. But I trade this stuff that you're seeing, and then I go buy stuff. I'm like, oh, hey, I want to buy a car, even though I don't have a car. Like, I want to buy, which just sounds stupid, but that's what you're supposed to do. Like you acquire assets in your life. So I trade this, and then I acquire assets, land, real estate, but in cycles. Like, I'm waiting, just like ninjas. We're all just kind of like waiting by while I'm trading, while I'm building, adding, like, these digits are increasing. And now I got to go out and buy assets. But so looking at this thing topped out, boom, crashed 35%. Every single time. Here's one. And look at the volume. I'll get to this candle in just a second. It just nicked the Lux Algo zone. And we sold off, we sold off 25%. So you're saying that we actually, the last time it hit that, you had me on, and I'm like, don't shoot the messenger. Well, I'm doing this again. Please do not shoot the messenger. I'm just telling you what the charts are telling you, and they predict the future at least 85% of the time in my book. When it came up down over here, if you guys can see this look at this volume. See this right in this area?
Huge spike.
Huge. That means that someone came in and shorted this thing and smashed it down. Why? It got in this Lux Algo zone and slammed down, probably 20%. Same thing right here. Boom, which this actually went out of it. You go up that high, and let me turn on my 9 count. It's probably way overextended. Well, no, it wasn't. It was at a 5. So it was only at a 5. And now we're at a 10, 11, 12, 13, 14, 15. So if you think that it's not going to get beat down, well, then you know something that I don't. But this just over and over and over. But this volume, I wanted to show you the volume that's going to come in from sweet little, I'm assuming, market manipulation, Jamie Dimon, what Chase has done, where they got busted. They keep getting busted. Like, oh my gosh, we have to pay $1 million. Oops. But we just made, $1 trillion. So that is what I wanted to show you guys on the chart. Oh, last thing you asked, when Fed pivot?
Yeah.
Well, I am glad you asked. I'm going to open this up. They only follow, see the Fed, which also this confuses everyone because everyone's like, when is Fed going to change their overnight rate? Well, that's just the overnight lending rate that they use to lend to one another. That's what the banks use. I really don't care, but damn, does it move markets? Like everyone has put this guy like Jesus Christ sitting on the throne, all powerful. Ladies and gentlemen, he's not, but he says he is. And when everything, when the shot hits the fan, he goes on whatever CNBC and they're like, so you essentially print money? They don't print money. They don't have the authority to. They can't. No, I mean, not say that they can't. They could, but they don't. If you understand how the monetary system works, but all they do. Let me change this instead of on the daily. Let me change it on the weekly so we can kind of go back and you guys can see it. Where is the Fed going to pivot? They're going to pivot when these two lines cross. Let me put on my Fed funds rate. This is the orange line. So when those two cross, that means that there is going to be a pivot. Now let me zoom out. Have they pivoted? No, they haven't pivoted. Actually, coming back here in September, when the bond yields were rising, that's when Jerome should have got off his booty and started raising the bank lending rates that the banks use. Yes, I mean the Fed does have control at the short end, long end not so much. But you can see this goes back to the 80s. The Fed just follows the bond market. That's it. And it's specifically the 2-year. So right now,
well, and real quick, Johnny, look, don't move the chart. Everyone's that orange line. See that plateau right there? That's that pain point I'm telling you about, where they start to stop and then everything stays the same. And then it starts to fall off a cliff and they pivot. Because that pain point, when interest rates get high enough to where everybody's hurting, the backs of the consumers are broke, then they wait for it to officially go. And then they start to drastically drop rates.
Yep. This is the spot that you're talking, right?
Exactly. And you saw 2 of those in the last 20 years.
Oh, it's every time, every single time. And that's what happens. They pause. And even though the market's selling off, so yeah, you're right. 100%. That's where they pause. It's this flat area and they're wrong.
In closing, real quick, if you don't mind, because you've talked about you own physical and you trade the shares. Why? And you've also said there's going to be a day. There's going to be a day. We don't know when that is, but when it just goes, the markets break, especially in silver. Why would you want to own? You trade it to make money, but why would you want to be stacking also physical?
Well, because it's real.
Yep, it's like a movement. It's
like there's not. I mean, I just showed you in the U.S. debt clock. It's that the U.S. debt clock. Oh my gosh, when this thing goes, you are going to be the richest human in human history.
I agree. Because people don't know. Once the paper system breaks, no one's going to be rushing to go trade paper shares. So there's going to be less buyers in that market and more buyers in the physical, correct?
That is correct. Oh my gosh. And it's going to happen overnight. It will. I mean, look within 24 hours, you had a bank. Look at all the digits that got moved. I know we say it's bank runs, but it's just it's a closed system, and the digits moved over here or the digits moved over there, and it just wipes everyone out overnight. And we can just with the click of a button, boop, gone. And when people try to buy physical, it's not there. It's not going to be there. So that's why I say trade the charts and own physical. What else? Also, one real quick. For those of you that are looking to lock in for finance a house, and when a rate's going to come down, rates are going to come down. They're coming down. You see the 10, this is the yield on the 10-year yield. We also went under the 2. This is a very, very important line in the sand right there. That's that blue one. That's your 200. We are below it. We are below it on the 200. So that means yields are going to come down, and TLT, that is a bond that you can buy using the computer by clicking and click buy. That's going to go up. Yields are going to come down. So let me stop sharing my screen and I can answer any questions that you have.
Yeah, let's do this because that needs to be a whole nother video, Johnny. You're right. In the near term, we're going to see that come down because the chart's saying it. But what happens if all of a sudden more and more countries, say like Japan, if we have to start selling our treasuries, we're going to sell them to to uplift our currency. If all of a sudden we start to see mass selling of US treasuries, what's going to happen to our bond market, the current rates?
Okay, now let me answer this question.
Yeah.
And I'll give you the answer. When other countries sell US bonds, they then receive dollars.
Yep.
So that's so I don't put much weight on which again, no dog in this fight. This is like a $300 trillion debt-based US dollar denominated debt-based system. So when they sell off their bonds, we're like, that's it. We're going to trade in yuan and we're not going to have anything to do with the dollar. Well, what do you have? Well, you have the dollar now. Okay. Now, what about all the debt that you owe? You got to pay that one off too. Oh, it's only 300 trillion. With what money? Oh, that's right. We don't have it. So we're in a system, and I come from the mindset that I think the dollar is going to be the juggernaut that just destroys the whole system. I could be wrong, and everyone's going to throw rocks at my face and say I am. Okay, I understand your argument, but please understand mine, that this is a global debt-based system based in the bond market, based in treasuries, based on the dollar, and they're all locked in and they got to pay a lot off. And I think it's just going to push more people to the dollar. It's horrible. I didn't create this thing.
Yeah, but I agree. So, but as you start to sell bonds in earnest, countries start selling them. When there's more sellers than buyers, it causes the rates to rise, correct?
That's complicated.
On the most simplest form, that's what happens, right? When you have more sellers and companies and countries still need to raise debt, they have to offer a higher rate of return for the bonds they're going to issue, correct?
Possibly, yes.
Okay. So then, yes, they get the dollars, but then what do they do with those dollars? Eventually, they're going to find themselves roosting back in America because they're just going to take those dollars and either dive into assets in America to buy things for their country, or they're going to be buying their currency. And eventually those dollars are going to slowly and ultimately start filling up in the US, which would cause inflation in so many different areas, right? As all those dollars just dive in, because we're already seeing more and more countries taking less dollars.
Possibly. I mean, there's so many dynamics in this.
True.
Because it's a debt-based system. If you pay off a dollar denominated loan, the dollar is gone. It's gone. Poof, gone, because it's debt. So if you ever want to, you take an economy, to destroy an economy, you pay off debt, and then you have no liquidity. So so when you ask me, like, there's so many different switches that happen. It's like, when you play mousetrap, you're like, so if I put this ball here, will it drop down into that hole? Well, yes. But then let's talk about the other 20 things, all the levers that have to go off. So when you ask me these questions, it's very complicated. So sorry, I couldn't be like specific.
No, I'm glad you said that, because it's perfect, because countries owe the US a lot of money. They have loans out there. The Federal Reserve has made loans. They've done swap lines, things like that. If countries start to go, we don't need as many of these bonds, they sell them, thus possibly causing rates to go up. But then they take those dollars and they pay off their US dollar denominated debt. You're absolutely right. That goes away. And with those dollars not circulating and velocity decreasing, we could see some very seismic shifts in the market, right? Like you said, they're complicated, but when big moves come like that, countries start going, why are we holding all these bonds? Let's just start getting rid of it. Or reserves, dollar reserves.
Possibly. Yeah. But again, with all this being said, look at like, this is the dollar. This is the DXY. We are just, let me move that over. The dollar is actually finding support right now. This is a critical area that we are currently on. And again, we're just slightly under the 200. Let me move back just so you can see that. Boy, that's probably, let me get rid of some of these things.
Yeah, because you're proving my point right now. If the dollar's finding support and it starts to lift, whether it be from interest rates or speculation right around the world, this would cause the paper price of gold and silver to sell off as the dollar strengthens, correct?
Correct.
All right.
So let me move this. I got this.
Brent Johnson would be super stoked to watch you saying this right now.
I know.
He'd be pumped.
Brent, he's a
Brent,
great
if you're
guy.
Watching, I hope you're doing well today. Hopefully I'll see you soon.
All right.
Probably
so you
run
see
into him like in Miami or something. Or
yeah,
Orlando.
I saw him a few months ago. Do you see how we're bouncing on this blue trend line?
Yes.
bouncy, 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 bouncy. I think we're going to bounce on it and we're going to keep heading higher. We're currently, and then also this red line is support. See, well, actually, it was resistance, resistance, resistance. Now it's going to be support. The red line, resistance, support, all the way back to forever. Resistance, support. So, like back where are we in the 70s? Support and resistance. We're actually on a very critical support line. So do not be shocked if the dollar bounces. This was a play that I said on the dollar. Wow, this went long, and then I'll end it. Let me zoom in. This was another one of those ascending, broadening wedges that you see, that you're currently seeing on silver. Do you see how it went up and then it broke? See the blue, right? Let's see. So see right in here, this is your ascending, broadening wedge, and then it broke. See, that's what I'm telling your audience. Be very careful. That's why we take profit. It broke below the 200 on the dollar. It found support. It found support again. If it could stay finding support, game over. Dollar still goes higher. If it goes down to this blue line and finds support, which I highly respect it will, that's just the game. So right here, find support. Next level is that blue line, find support. Okay.
Well, in closing, Johnny, if the dollar goes to 94, what's going to happen to gold and silver paper prices?
Right.
It's going to go up. Yeah. So that's the other thing too that we're always wondering, because if it does that, if the dollar goes to 94 and finds support down there, like Johnny is thinking it could, gold and silver takes off again. Let's say it takes gold to $2,100 and we break through the all-time high, and silver possibly, let's say it gets to 30. Psychological damage happens in the consumer and the retail buyer. They go flooding into the markets, and now all of a sudden on CNBC they're saying, where'd all the precious metal go? If those news stories get too big, that could also fracture the physical metal and do what you've been talking about, that day of reckoning. I'm not saying it's going to happen anytime soon, but we've got to be considering all of this. So I'm glad you separated the difference between physical and guys, everything Johnny said, we're very good friends. I can verify literally every single thing down to what he owns. I know this literally. So I want to just say to Johnny, because people don't believe sometimes, and it's like you need to back people up. Johnny is awesome and knows exactly what he's talking about.
Well, I'm an open book with my true friends. Like, I don't go online and be like, hey guys, here in my garage. But if anyone knows me, I will tell them everything. There is nothing that I hide. And that's what Ninja is saying, is I'm a real guy, and I run over here, and that's why I trade. I go here, and then I move it over here, and then I move it over here. And I could be wrong sometimes, but that's what I do. And then I collect assets.
Yeah. And the only thing that Johnny doesn't trade, just so you know, because he can't be in short supply of it, is hair products. All right. With that being said, Johnny, thank you so much for being on. I really appreciate it.
All right. No problem. Anytime, my friend.
Right. Guys, with that being said, the Economic Ninja is out. What?